All right, what's going on, guys? Zarb here. I want to go over the 80% setup. I promised I would make a quick video on this because this setup has been presenting a lot, especially lately. It's been giving some really high probability trades, and this has been one of my favorite setups to trade for the last couple of years, and it incorporates a volume profile. So if you don't know how to use this indicator, it's called SVP. It stands for Session Volume Profile. Get it on right there on TradingView. And what this is going to do is it's going to plot all of the volume profiles of the previous days. So we're going to be looking specifically at the previous day's profile. So for example, we're going to be going over this setup on ES. And in that case, we're going to be looking at this profile. These are the levels we're going to be focusing on. Now, I'm not going to do a whole in-depth lesson on volume profile. I already have content. I'll make sure to put a link in the description to my volume profile intro. But for the sake of the video, I want you to understand what is the previous day's point of control, because that's going to be the key level we're referencing for the 80% play. That's this red line right here. The previous day's point of control is the level on the chart that had the most volume conducted for that trading day. So if we're looking at this profile, then where this red line is, this is where the most volume was conducted for this given day. So I mark off that level every day, previous day's point of control. So on ES, it was down here at 5,972, right? Now, what the 80% play is, this is why it's called the 80% setup, because roughly 80% of the time, the market is going to engage its previous day's point of control at some point in the New York session. Now, if you don't believe me, just plot this indicator on your chart and go back and look. We could find a ton of examples right away. So if you see right here, on Tuesday of last week, our previous day's point of control is right here, right at 6,015. Let's just mark that off. Boom. What do? We open up below value, below the previous day's point of control. We trade up to it, tap it, and reject. But before we get that rejection, we come up and engage the previous day's point of control. Look at this day. What do? Our profile is right here. So our previous day's point of control is right here. And we engage it. We touch the previous day's point of control. So it's very important to understand. Most days we're going to engage the previous day's point of control, but that does not mean that the 80% play is going to be available for you every day. The key difference about a good 80% play is that we open up way below or above the previous day's point of control. Now, why is that? Simply because we need some room to get good risk reward to trade up or down to the level, right? If we open up within 2 points of the previous day's point of control in the overnight session and we engage the level, there's no setup there, right? So you're not going to get this setup every single day of the week, but you will find it usually at least once or twice in the week. You're going to get a day where we open up way above or below value in the point of control. And on those days, I have a clear-cut directional bias that I want to trade in direction of the previous day's point of control. So, a good way to think about this is to just look at the previous day's point of control as a magnet for price, right? Now, again, why is that? It's because it had the most volume conducted there. So the market is attracted to where the most volume is. Now, on a day like Friday, where we open up way below the previous day's point of control, right? It's all the way up here and we open up down here. I had a clear-cut directional bias. I wanted to see longs up to the previous day's point of control, using it as a magnet. But it's very important to remember that just because we have the setup does not mean when the market opens at 9:30 that we just automatically start going long, all right? You need a proper entry and exit system. So I'm going to go over how I find my entries and exits using ICT, but I really want to make this clear. It does not matter what your entry and exit system is. If you use ICT like me, that's great. If you use VWAP breaks, that's great. If you use classic support and resistance, it does not matter. How you enter and exit the market, there are a million different ways to do that profitably. What the crux of the 80% setup is doing is giving us an extremely clear-cut directional bias for the day. And then we use our technical analysis, entries and exits, to get involved in the trade. But being able to have this setup and just have the directional bias and be steadfast in it because we know we have an 80% probability that we're going to trade up to that level at some point. That is the edge in this setup, all right? That's the key. So I have this level marked off. Now, again, I'm not going to do a full lesson on volume profile. I already have content for that, but we're going to mark off the other levels. So you have the previous day's value area high. That's the highest portion of the range that has the most volume conducted there, just to be brief, and the previous day's value area low right here. And again, that is the lowest portion of the range that had the most volume conducted there. So those are our key levels, but specifically the 80% play, we're focusing on the previous day's point of control. So we don't need that indicator up all day. Once we have it up, we mark our levels. I don't need to keep my chart messy with that profile indicator up there. I just take it off and I have my key levels. Now let's go into the replay mode and go to when this setup presented. So again, like I was saying earlier, you can't just go long right at the open because you know that, you have a really high probability that we are going to go up here. Now, if you didn't know about this setup, this is looking very bearish, right? This is some extremely bearish price action. We were bearish all week, but I was bullish on Friday. I wanted to focus on longs because I just know it's extremely likely, just based off statistics, that we are going to engage this level. But that's not enough alone, right? I have a clear-cut directional bias, but now I need to get my entries and exits. So what do? Personally, I like to go to the higher time frames and see if I could find confluences to align with this overall idea. So number one, we had 6 consecutive bearish days. So just on that alone, we do know that the market is probably gearing up to be likely for a pullback to just get some type of bounce relief. Again, we're not looking for a full-blown reversal yet, but when we open up way below that point of control and we've been so bearish and we're coming into some key support right here, specifically, I was looking at this 4-hour fair value gap right here. But even if you're just playing classic support and resistance, you could just map out this whole overall zone, right? That whole overall zone, really important swing low right here. We would hope that the market, if this setup is going to play out, that this support area is going to hold. Now, again, using ICT, one other key thing for me was that we had a bullish SMT divergence. So I'll go to NQ real quick. So right here, ES did not take out this swing low, right? And this is from Monday the 13th. If we go to NQ just very quickly, NQ did take out that swing low. So here's Monday the 13th. NQ takes out that low. So we have a bullish SMT divergence. So again, we're stacking confluences in our favor, right? We're not just going to blindly go long, but we know we're below the previous day's point of control. We have an 80% likelihood that we're going to hit that level at some point in the trading day. Number 2, we're coming into some key levels of support. Number 3, we have a bullish SMT divergence on the 4-hour time frame. Now the confluences are stacking up and I was feeling really good about this long setup. So now let's go down to the 5-minute time frame. That's where we're going to get our entry for this setup. So first off, we tap into this key support and we do get some displacement higher, but I was not super convinced in the longs here. And here's why. 2 reasons. Number 1, we created equal lows. So I was expecting these to get ran through. That's number 1. Number 2, in all of this price action, we didn't have a single 5-minute fair value gap. So we did not have any strong displacement, at least from the way that I look at it, to expect the reversal here. Now, going into when the setup finally presented, this is way later in the day. And this is why it's important to have, your ways of entering and exiting the market. It's not enough to just blindly go long because we know we have the point of control above us. But now we finally get the setup to present. So let's play out some of this price action. So right here, we finally get some displacement. We get a 5-minute bullish fair value gap right here. What do we do as well? We get a market structure shift. So we take out this swing high that made the last lower low. We take out that lower high, right? So that is a market structure shift. Then what do? If we play out some more of this price action, we tap back into this 5-minute bullish fair value gap. So this would be your entry, for me at least, trading ICT. seeing that we bounce outside of this level, stops below recent structure low. And again, for the 80% play, I mean, you can target all the way up to the point of control. Now, you don't have to, right? This is important. Just because the previous day's point of control is like 100 points away on the ES doesn't mean we need to hold all the way to that level. If I can get good risk reward from here to maybe just this swing high, that's still a great trade that'll net me 2R. And I don't need to hold all day, right? So that just depends, again, on your risk reward, on your entry and exit system. What this setup is doing is just giving us the idea that we have a clear narrative to trade ultimately up to the previous day's point of control, because we know it's likely to happen 80% of the time. So again, coming into here, let's just play the rest of this price action out and just really quick delivery. And I mean, right at the close. So right at the close, around 4 o'clock, we engaged the previous day's point of control, just showing how powerful the statistic is. We traded below it all day, but still we have to go and engage that level to fulfill the 80% stat. And that's the setup, guys. Again, the crux is that we're being given a really high probability directional bias. That is the key. How you enter and exit, there's a million different ways to do that. But again, if you want to learn more about the volume profile, just start plotting this out on your chart. Again, it's indicator SVP. Plot it on your chart, plot off the previous day's point of control, the value area high and low, and look out for this setup. Like I said, it happens 1 to 2 times a week usually, and I'm always calling it out. So if you follow me on X, I'll be calling out these setups. I've called out the last 2 that happened in this prior week. But that's it for this video, guys. Hope you like it. Let me know if you've been using the point of control or if you're going to start using it. And if you ever have any questions, please feel free to hit me up. And that's it, guys. Peace.